Okay, I think we are finally live. What's up, y'all? Wow. So I'm trying something new. I'll get into my introduction in a second, but this tech thing is so interesting when you are trying out the new stuff, and you would think like a millennial would know what they're doing, but I don't. I don't know at all. But so welcome, welcome to the live stream. Welcome for those of you who will be watching this on the replay. I got my notes so we can go ahead and dive in here in a moment. And I'm very excited to see how this works out and how this goes. So let me let me get my stuff together. All right. So, quick intro. Welcome. For those of you who will be tuning in live, and for those of us who are catching this on the replay, my name is Tremaine Wills. I am a financial planner and essentially a CFO. Um, and I work with service-based entrepreneurs, primarily folks who are solopreneurs that may have, some freelancers or folks, contractors on staff, and they need some support with managing their money, both their personal and business finances. So that's what I do. I am the go-to for figuring out what to do with your finances and also a certified financial education instructor. So not only do we do the work of um, managing books and creating financial plans and all of the fun money stuff, we also teach about it. So for those of you who may be watching here that are not quite ready to hire yet, this is a great place to start to learn what to do as you are kind of DIYing it before you're able to hire somebody. To come onto your team. So today we're going to be diving into one of the topics that I think is commonly misunderstood for entrepreneurs is how much you should be paying yourself and how you can begin to do that in a way where it makes sense for your business and it also helps you achieve your goals. So, if you've ever made, 10K in a month and you feel like you're still broke after that, this will be a good opportunity for you to kind of learn what to do differently. So that way you don't have that feeling of you're working hard, but the money's not doing what the money's supposed to do. All right. So I will be answering 10 common questions that people ask. So if you're somebody who takes notes, this will be a good time to kind of grab that notebook. And if you're watching the replay, drop your questions in the comments. We always come back and answer questions. And this might be an opportunity to, get some more content with a longer explanation around things you might have questions about. And so we respond to all of those. And like I said, if it's a topic that a lot of people have questions around, then you might see a longer video related to it. So let's get to the paying yourself trap, right? So a lot of times when folks come into entrepreneurship, there are one of three things that we do, right? The first one is you pay yourself nothing, right? And this is common amongst folks who may still have their 9 to 5, where that is covering all of their personal expenses. So you just reinvest everything inside of your business. And while in the beginning, it's a great idea, it does establish this pattern of not taking any compensation from your business. And so you may never really know, okay, what exactly am I supposed to do to pay myself from this? Then the flip side of that is folks who take everything out of the business and pay themselves. And while it's good to pay yourself and get some compensation for your hard work, you don't want to take everything out of your business. And then the other thing that a lot of entrepreneurs do is they pay themselves whatever's left over. And to be honest, this is where a lot of us find ourselves when you are just making enough to scrape by and you don't really have any real financial strategy in place. So let me know in the comments. Have you ever been in a position where you just paid yourself what was left over, hoping it worked out, right? And I can tell you, I was there when I was first starting in this business. It was like, well, this is how much is left in the account. And so that is how much is going to be transferred into my personal account. Right. And so it's nothing to be ashamed of. Right. Because a lot of us, that's where we start. And until we know what to do differently, we're just kind of out of the loop about what we need to change. So let's dive into some of these questions about what you'll need to understand in order to do better with paying yourself around your finances. So, question number one, the question I have here is, what does paying yourself actually mean? And so, this means being able to consistently take money out of your business where you are paying yourself as if you are an employee, right? And so that can look like a owner's draw, or it can look like being on salary. But the core component here is it is a consistent, predictable schedule that allows you to accomplish real personal financial goals. So it's not something that's random, right? It's not just, oh, whatever's left over. There is structure around what you're doing. So that's probably the most important piece of shifting from being in a state of chaos to really having some structure around your finances, is that there is strategy behind what you're doing, and it allows you to achieve some of the personal financial goals you have. So, question number two, is there a minimum income that I need to hit before I start? And so, this is always a great question because what it does is it removes this idea that, oh, I have to be making X amount of dollars first before I start to take anything out of the business. So, what you can do is, instead of having a flat dollar amount, you can set up a strategy where you're paying yourself a percentage of a particular revenue amount. So let's say you're just getting started and this business, it cannot support you right now, right? But you can put yourself in a position where you're paying yourself 20 to 30% of revenue that comes in every single month, right? And so what this does is it starts to build that discipline, and it gives you structure. And that's what's really, really important when you are setting up your goals and putting your structure in place for how you need to pay yourself. So if you're just getting started, and even if you're not just getting started, maybe you just need a hard reset, you can start with a percentage of how much revenue is coming in and pay yourself a percentage. So that way you start to build the discipline of paying yourself from your business. So I have another question for you guys. Um, Let me know in the comments, if you are in business, what percentage are you paying yourself? Or let me know if you're kind of just winging it, right? Drop that in the comments. So question number 3, how do I know how much to pay myself? And so this is always a great question, right? Um and so this is going to be predicated by a few things. First, is the business responsible for covering your personal expenses, right? Is this the way that you generate income so that you can maintain your livelihood? If that's the case, then the answer is you need to pay yourself however much you need to manage your personal expenses. And so that's going to require you to have some sort of budget in place so that you know what that number is, right? And for many of us, we have no idea what that amount is. So if you know that your personal expenses are $4,500 a month, then at a minimum, your business needs to be paying you $4,500 a month. And so the question might be, well, what if I'm not making $4,500 a month? Then you need to generate more revenue. Or you may need to get some sort of part time job or full time employment while you're scaling the business up so that it can cover those expenses. Okay. Another good rule of thumb, so let's say you're getting to a place where you're making substantial income or you're making substantial revenue and your revenue is exceeding six figures. Now you can start to break this down by a percentage of the revenue that's coming in, or deciding what percentage of the net income or profit that you're going to take for yourself so that you can have healthy payroll as a self-employed person. And so again, this is all going to be personal. It's going to be dictated around, what do you need to reach your personal financial goals, and how much money is available in your business in order to be able to pay yourself. So question number 4, what is the difference between an owner's draw, salary, and a distribution? And so all of these are ways for you to take payment as an owner in your business, but they're going to be determined by the type of structure that you have in place. So If you are a sole proprietor or a single member LLC and you're taxed as an LLC, you will be taking owner's draws. And this typically is just going to look like you're going to be moving money out of the business account and transferring it into your personal account. If you are taxed as an S-Corp, then you will have a salary and then you will take distributions if you want additional income coming from the business. And so, for those of us who are structured as an LLC, but being taxed as an S-Corp, it's important that you do have that W-2 set up so that you are staying in compliance with the way that you are supposed to be running your business. Question number 5. Should I pay myself the same amount each month? Now, ideally, that would be what happens in a perfect world, right? And so your question might be, well, what happens if my revenue is variable and I'm paying myself a percentage of what's coming in, right? And so in the beginning stages of your business, this might be the case. But once you get to a place where the amount of money that is available to pay yourself exceeds whatever you decide your salary or your payment is going to be, then you should have a consistent amount, and it shouldn't just automatically increase because there's more money in the business, right? This is where you start to get to the place where you're paying yourself a consistent amount, and now you're starting to really operate your business in a way where if there's extra money, you can either reinvest it or decide if, okay, now I'm to a place where I want to increase my salary or increase my owner's draw, and that's going to be the new baseline. But ultimately your objective is to get to a place where the paycheck is consistent and it's the same along that cadence that you have set up for yourself, whether that's going to be every week or every 2 weeks or once a month, whatever you decide. That consistency, that discipline, that routine is what's going to give more structure to your business, so that way you're actually starting to treat it like a business. All right. So let me ask this question for those of us who are engaging in the comments. My question for you is, would you feel more confident with a set salary, or would you feel more confident with the flexibility to pay yourself whenever? And I want to know, like, is this predicated on the revenue that's coming into our businesses? Because I think sometimes when we have a lower revenue, we want that flexibility for the just in case life happens, right? All right. So, question number 6. What is the right pay model to pay myself that might be connected to my revenue level? So, here's where we start to get into some strategy and where it might be time to consider your how your entity is taxed, because that's going to be how you employ some of these different strategies. So, if we're talking about paying ourselves less than $5,000 a month, then you're probably still being taxed as a single member LLC, and you'll be taking an owner's draw. And so that's just going to look like you transferring some money from your business into your personal account. But if you're getting to a place where you're paying yourself, between $5,000 and $10,000 a month, then you're probably in a position now where you are being taxed as an S corp, and so you will likely be taking that amount as salary. And so that could also look like having some additional distributions come to you either monthly or quarterly to reach that ideal number, whatever is going to be best for making sure you have the best tax optimization and you're not paying too much in taxes. And then if you are going to be paying yourself more than $10,000 a month, now we're really going to be talking about, okay, what does payroll look like, and really having some more advanced tax strategy. But you're absolutely going to be on salary, and there might be some additional incentives that you'll want to set up. So that way, again, we're always thinking about optimizing for taxes. So, question number 7: what happens if I pay myself too much, right? So, let's say you are in your business and you have been used to, paying yourself a nice majority of the revenue that comes in, especially if you have higher profit margins. But let's say you get to a place where now you have additional vendors that you've taken on and additional contractors and just more tech things that you are using, and you realize, oh no, I might have paid myself too much. Some of the consequences of paying yourself too much can look like, okay, now you don't have enough money to really reinvest into your business the way that you want to. You may not be able to bring on additional staff to support you while you scale. And it might even look like, having to skip paying yourself for a month while you get your business back to a place where it can support itself. So, this idea of having structure and routine around how much you are paying yourself is important because it allows you to have that consistency and that discipline. So, it's clear around what's happening with the money in the business. And you don't have to, go back and say, oops, made a mistake, paid myself too much, but there is clarity around how much you're paying yourself, why it's that amount, and it doesn't disrupt the flow of the business. Question number 8. How much should I save for taxes before I pay myself? And so, small business owners, we're always talking about taxes and we're thinking about, you know, what can I do to prepare? And so, as you are making sure there's enough money available to pay yourself what you need, you want to set aside 25 to 30% of revenue coming in so that you can have money available for taxes. So, let me know in the comments. I'm always curious to see, are we at a place in our businesses where we are paying quarterly estimated taxes, or are most of us here just waiting until the deadline to make those tax payments as a lump sum? So let me know in the comments. Question number 9. What if I want to reinvest everything back into the business, right? And so, as I mentioned in the beginning, when you are like dual employed, right? Let's say you have a W-2 salary that you receive from working for someone else while you're building this business. A common thing that happens is most people will reinvest everything back into the business because they don't need the money right now. But one thing I would encourage you to do is to pay yourself something, right? Even if it's only like 250 bucks a month. Again, what it does is it develops this discipline, this structure around owner's compensation, so that you are practicing the habit. And then our last question here is, when should I think about moving to payroll or hiring a bookkeeper or CFO to kind of help me with those kind of things? And so the answer here is, when you get to a place where it's too much for you to handle it yourself and you are looking to buy back your time. So a lot of us, when we come into entrepreneurship, we DIY as much as we can. But when you get to a place where your business is becoming profitable and you just need more of your time back so you can focus on revenue generating activities, then it's time to think about hiring somebody to bring onto your money team to take over those things for you. And so, not only does that help you buy your time back, it puts you in a position where you can lean on the expertise of whoever you hire so that you can take advantage of things that are going to help you save on taxes and give you greater access to capital, and really do some strategic planning around being able to pay yourself well and grow your business. So, if you have not already looked into, well, what is the cost of bringing somebody on? I encourage you to start to interview different bookkeepers and CFOs and accountants to really find out, like, okay, how is this going to help grow my business and put me in a position where I can reinvest this time, so that I can focus more on revenue generating activities. All right. So let me know in the comments. Have you started to think about outsourcing some of your financial activities? Um, and have you already begun interviewing or reaching out to possible accountants and bookkeepers that you'd like to add? So I've answered, 10 of the common questions. And so now I want to talk about some common mistakes to avoid as you are going down this journey of managing your finances a little bit better as a solopreneur. The first thing, of course, all of us talk about it, right? Not mixing your business and personal finances. So you want to be very, very careful that you are not commingling assets, and you want to have separate accounts for your personal accounts and separate accounts for your business money. So that way it's a clear separation and you can run it like a well oiled machine. The next mistake that you want to make sure you avoid is not setting aside money for taxes, right? And if you did not prepare for 2024 tax year, that's okay. You can start to get on the right path for 2025. Because often what happens is when we have a huge tax bill, then we find ourselves in a payment plan throughout the next year or two, depending on how much we owe, and then that impedes our ability to start to save for the next tax year. And so you find yourself in this continuous loop of, oh snap, I still owe the IRS, right? So the best thing that we can do is to start to get ahead, and we do that by setting aside 25, 30%, so that when it is time to pay those estimated quarterly taxes, and if we're going to have a bill when our returns are due, we have the money available and we're not in this constant loop of being behind and not having the money. Another mistake that you can avoid is paying yourself too much too soon. So, this is especially common in service based businesses when you have low overhead, especially if you have a virtual practice. So, for my folks who are watching this, that might be coaches, consultants, virtual assistants. When you have low overhead, it can seem like, wow, I really can take this 80% profit I'm experiencing and pay myself all of it, right? But what you want to do again is make sure that you're setting aside some money for taxes and setting aside money to reinvest in tech and to um, invest in different things that are going to upskill you so that you can improve your skill set and eventually charge more, right? Scale, increase the revenue in your business. So, by taking your time and slowly increasing how much you're paying yourself, you set yourself up for success. So that way there's money inside the business to reinvest so that you can increase your capacity and your ability to generate more revenue. Another mistake that you can avoid is not having a system at all. So that's kind of like where I talked about in the beginning, where folks kind of just say, whatever's left over, well, that's how much I'm gonna move to my personal account, right? And so this is probably the most chaotic way to run your business. So we want to avoid this by having some sort of strategy, whether it's paying yourself a percentage of the revenue that's coming in, or setting a flat fee amount that you're going to pay yourself, and then getting on some sort of routine, weekly, bi-weekly, monthly, first and 15th, whatever it's going to be, so that you have that discipline and structure inside of your business. And then the last mistake, of course, is not getting any help at all. And sometimes we'll wait until the damage is so catastrophic, the fees rack up because of how much work has to be done. So a good thing to start to do, of course, is seek out and learn, attend sessions like this where you can identify what are some mistakes you can avoid, but then also begin to talk to different accountants, bookkeepers, CFOs to figure out, what are the services they offer, how can they assist you, and how is it going to help you bring money back into your business, right? Because ultimately, every expense and every investment we make needs to have some sort of return. And a good CFO, accountant is not just going to save you time on your bookkeeping and save you time with filing your taxes. They're also going to identify opportunities that help you make more money or help you save more money. So, it investing in somebody that is going to bring in revenue and help you recapture some of that money is a great way to make sure you are getting that ROI you need. And ROI is return on investment. All right. So, thank you guys for tuning in. For those of you who've tuned in live to our first Monday night Master Your Money session, we'll be hosting these every Monday at 7 p.m. Eastern. And so if you are catching this on the replay, of course, you are welcome to drop your questions. And what we'll do is take a look to see, if there's anything that we can expand on deeper. And I'll be happy to answer those questions. But if you are somebody who's here and is like, hey, I just need some more support, I am going to drop the link to my complimentary um one-on-one call, so that way you can grab some time from my calendar. And then you might also be here watching and you're like, you know what? I'm not ready to talk to you one-on-one, but I might want to jump on your free newsletter. And every Sunday, I send out a newsletter that has grant information, about grants that are due within the next 2 weeks. And so, this past yesterday's newsletter had like 15 different grants and accelerators that were coming up due. And so, it's a good way to both get access and information around what money's available, but it be focused, right? Because sometimes there's newsletters that come out and it's like stuff that's not due for 5 months. And, like, if you're anything like me, I'm like, that's not urgent, right? I'm not about to sit down and do that right now. But, what we like to do is just kinda put the stuff that is pressing, in front of you so you can take action on it right now. And so I'll drop the link to the newsletter. So if you want to get access to that, you can jump on the free newsletter. And so I'll hang out here for a little while and see if we have any additional questions. Okay. Uh the Libra man says, great advice. I want to get to a point where I'm not trading my time for money. Yeah, right. And so I ultimately that is the goal, right? We want to stop trading time for money and build up our assets so that we have passive income, right? And typically what I tell folks is like when you're not trading time for money, now you're entering into retirement zone, right? That is what retirement is. It's when you do not have to clock in, clock out in order to make any money, and your assets are paying you so that you can do whatever you want to do with your time. So that's kind of like the best part of getting to retirement, is having the freedom and the flexibility to do whatever you want to do. All right. So this has been fun. Um, I want to just remind you that if you're watching this and you do not already have somebody on your money team, you can tap the link in the comments and schedule a complimentary consultation where we can talk about how we can support you and how we help folks who are running their businesses get to the real core of what their numbers are and really have a full strategy for how they're going to pay themselves, retire, grow their wealth, all things revolving around money. And so, if you enjoyed tonight's session, I encourage you to share. What's the things you're supposed to do on YouTube, right? Like, comment, subscribe, all that good stuff, right? So that way we can make sure we are helping reach more people and really encouraging folks to manage their money better. So this was fantastic, and I will see you guys next Monday night. And I will drop the link in case you want to join me in Zoom room and ask your questions live. All right, everybody, have a fantastic evening.